Welcome to Tech Money Madness, your daily U.S. stock market podcast. June 24th, 2026.
And what a day it has been. I mean, truly wild.
Oh, absolutely. So welcome everyone to today's deep dive. Our mission today is really to make sense of what feels like a totally chaotic day in the markets.
Yeah, chaotic is definitely the right word for it.
Right. I mean, we've got these massive tech surges just colliding head-on with some very major geopolitical and economic shifts. And if you're out there actively managing a portfolio or, even if you're just trying to understand where the economy is actually headed, you need to hear this.
Because the data we're getting today paints a really vivid picture of the future. It's not just noise.
Exactly. It's the blueprint for the next decade. We're looking at a market driven by a cocktail of wild earnings reports, a surprising economic resilience, and of course, global tensions. Okay, let's unpack this, starting with what we just have to call the great semiconductor split.
Yeah, that split is it's historically significant. Wall Street has officially stopped buying into the AI hype blindly.
Right, the honeymoon is over.
It really is. They're demanding execution now. We are seeing a very ruthless separation between companies genuinely powering this revolution and the ones just, riding the coattails.
Yeah, so let's look at the winner's circle first. Micron Technology dropped their quarterly earnings today, and it showed a quadrupling of revenue.
4 times the revenue. Just staggering.
Literally revenue times 4, which sparked a 16% jump in its stock today alone. But, I mean, here is the number that genuinely stops me in my tracks.
The year over year.
Yes. The stock has surged 700% over the past year. 700%. It's like we're in a modern gold rush, but investors are suddenly getting incredibly ruthless about which shovel makers they're actually going to back.
That's a great analogy, because it sounds absurd until you look at the mechanics of how AI actually works.
Right. Explain that a bit for us.
Well, everyone focuses on the processors, the GPUs, doing the actual math. But AI models are hitting this thing the industry calls a memory wall.
A memory wall.
Yeah. To train a massive language model, you have to move petabytes of data in and out of the processor at just blinding speeds. And Micron manufactures HBM, which is high bandwidth memory.
So they're the ones solving that bottleneck.
Exactly. They are basically stacking memory chips on top of each other to shrink the physical distance the data has to travel.
Wow. Okay. So it's like, think of AI like a massive new city being built overnight. And Micron isn't just selling bricks for the buildings. They're selling the high-speed, multi-lane highways you absolutely need to transport the materials.
Right. And if those highways get congested, the whole construction site grinds to a halt. It doesn't matter how fast your builders are.
So Micron has all the pricing power. All of it. And then on a related note, we have Qualcomm.
Oh, yeah. Qualcomm was huge today, popped 15% today. And that was after they almost doubled their projection for 2029 non-handset revenue.
What's fascinating here is how aggressively they are targeting the edge. Because for the last decade, Qualcomm was just trapped in this cycle, right? They completely relied on you upgrading your smartphone every 2 years, which nobody does anymore. The market is saturated.
Exactly. So by doubling their non-handset revenue projections, they're essentially telling the market, hey, we own the computing power for the physical world now.
Like industrial robotics, smart grids, that kind of thing?
Yeah, and especially next-generation automotive systems. They are taking compute power out of the centralized server farms and putting it into the devices all around us.
Which is brilliant. But then we have to talk about the casualty of the day, which is Cerebras.
Yeah, that was rough.
Completely different story from Micron and Qualcomm. Cerebras' stock absolutely plummeted after earnings. Right. And their CEO came out claiming that their margin forecast was, quote, misunderstood.
Yeah, you can't say that right now.
Right. I mean, in this gold rush environment, Wall Street simply does not have the patience to misunderstand you.
No, and I would actually take it a step further. In the silicon fabrication business, ambiguity is completely toxic.
Because it's so expensive to make these things.
Exactly. When Cerebras talks about a misunderstood margin forecast, what investors actually hear is our wafer defect rates are unpredictable.
Oh, I see.
Manufacturing these specialized AI chips is incredibly difficult. Like, a single microscopic dust particle ruins the silicon. So if you can't give a crystal clear forecast on your yield, meaning how many usable chips you actually get, Wall Street just assumes you're burning cash on dead silicon.
Wow. So Wall Street has zero tolerance right now. You either have the yield or you don't.
Yep. And investors are moving their capital instantly to the ones who do.
So where is all this specialized non-handset computing power actually going? Because it's not just staying in data centers.
No, it's bleeding into the physical world, just like we saw with Qualcomm.
Right. And here's where it gets really interesting, especially in the auto sector.
The auto sector is wild right now.
It is undergoing a violent shakeup. Today, Amazon Zoox unveiled a totally redesigned robotaxi for their expansion. But the headline that really got me was Slate Auto.
Ah, yes. The $25,000 truck.
Yes, a sub-25K electric truck. And they're claiming they'll actually be profitable and cash flow positive by next year. I mean, I have to push back on this a little. Legacy automakers like Ford and General Motors are bleeding billions on EV trucks that they sell for $70,000.
No, easily 70K, yeah.
So how on earth does Slate Auto disrupt the entire auto hierarchy with a profitable 25K truck? I mean, is this just financial vaporware?
I completely understand the skepticism. It sounds impossible, but if we connect this to the bigger picture, it really comes down to a fundamental breakthrough in vehicle architecture.
Okay, how so?
So legacy automakers build cars the way they always have. They design a heavy metal chassis, and then they drop in like 100 different electronic control units, ECUs, to manage the windows, the battery, the brakes.
Right, which sounds incredibly complicated.
It is. It creates this massive rat's nest of wiring and software conflicts. It costs a fortune to assemble. But Slate Auto is doing the exact opposite. They're using a software-first architecture.
Meaning what exactly? Like they build the central computer and just sort of wrap a truck around it?
Yeah. That is exactly the mechanism, yeah. By using a centralized, high-powered computing brain, which, by the way, is likely powered by those exact edge chips Qualcomm is selling, they eliminate literal miles of copper wiring.
Oh, wow.
Yeah. It reduces the vehicle's weight by hundreds of pounds and cuts assembly time by 40%.
So they didn't invent a magically cheap battery. They just reinvented how the car is manufactured on the floor.
Exactly. And it's happening while the legacy giants are basically fighting for their lives. I mean, look at Toyota gaining on General Motors in new U.S. sales forecasts today.
Right. It just highlights how distracted and vulnerable the old guard is while this whole re-engineering of the physical world happens.
It really does. But, you know, this rapid re-engineering has a sort of dark Wild West element to it as well.
Oh, you mean the black market stuff? Yeah, that was crazy today.
It is. The demand for compute power is so high, and the supply of these top-tier chips is so constrained that we are seeing some truly bizarre market anomalies.
Yeah, the CEO of NVDA made comments today explicitly calling out black market data centers. He said they're made entirely of smuggled parts and called them a, quote, dead end.
Right. Because geopolitical restrictions on who can buy the highest tier NVIDIA chips are incredibly strict right now.
So naturally, a shadow economy pops up.
Exactly. Shell companies buy the chips, smuggle them across borders into restricted regions, and then try to just plug them together in unregulated warehouses.
But wait, why is the NVIDIA CEO so confident that these rogue data centers are a dead end? I mean, if you have the chips, don't you have the power?
You'd think so, but not at all. A single NVIDIA H100 chip generates an immense amount of heat.
Like how much heat are we talking?
So much that when you cluster tens of thousands of them together, you are basically building a small nuclear reactor's worth of thermal output.
Good grief. So you can't just throw a window AC unit in a warehouse and call it a day.
No, absolutely not. They require incredibly sophisticated liquid cooling infrastructure, dedicated power substations, and microscopic precision in their networking just so the chips can talk to each other.
So a Frankenstein data center built with smuggled parts is just going to melt down.
It'll melt down or bottleneck so badly that it never achieves the efficiency you need to train a modern AI. But the fact that international smuggling rings are trying this, it just shows you how desperate the global hunger for this hardware really is.
Right. And, looking at the legitimate side of this, big players are recognizing the value here, too. Look at Berkshire Hathaway.
Oh, that was a massive flashing signal today.
Right. Berkshire Hathaway, a portfolio famous for railroads and insurance, is shifting investment toward high-growth AI opportunities, specifically pouring capital into Alphabet.
Yeah, Warren Buffett's empire is essentially declaring AI as a utility. They avoid trends they can't predict. They like monopolies.
So them aggressively shifting into AI means they view it as the new foundational infrastructure of the global economy. Alphabet builds the data centers and rents out the intelligence, like an electric company.
Exactly. But funding all of this, whether it's Alphabet's data centers or Slate Auto's cheap trucks, requires an incredibly stable underlying economy.
Which perfectly brings us to the macroeconomic data we got today. Because honestly, It's surprisingly robust.
It really is.
The Federal Reserve announced their latest stress test results, and they stated that U.S. banks can withstand $708 billion in losses amid an overhaul of capital rules.
708 billion. That's a massive buffer.
It is. And on top of that, Treasury Secretary Bessent predicted that U.S. GDP growth can return to 3% before the end of the year.
And this macroeconomic strength is so crucial for the listener to understand because a banking system that can absorb 708 billion in shocks gives tech and auto companies the credit lifeline they desperately need right now.
Right. Slate Auto can't scale a cheap truck without billions in credit.
Exactly. If banks were fragile, the lending would freeze up and this entire AI boom would just grind to a halt.
But, we do have to balance that domestic economic strength against the geopolitical reality, which is tense.
Very tense.
And just to lay out the facts neutrally here, the White House formally requested $87.6 billion in supplemental spending today. And that's specifically for the ongoing Iran war and for farm aid.
That is a massive funding request for overseas conflict.
Right. But here is the analytical puzzle I'm really struggling with today. How is it possible that we have an $87.6 billion funding request for a war, we have commercial tankers actively transiting the highly contested Strait of Hormuz, and yet U.S. crude oil briefly dipped below $70 a barrel today?
It seems completely contradictory.
Historically, any whisper of military tension near that strait sends oil skyrocketing. Why is the market so numb to the geopolitics?
This raises an important question about how energy markets are fundamentally recalibrating right now. We are witnessing a tug-of-war between traditional geopolitical risk and modern macroeconomic demand.
And demand is winning.
Demand is winning. Normally, conflict in a major choke point adds a fear premium to crude oil, but the market is coldly calculating the transition we just talked about with EVs.
So they see Slate Auto dropping a $25K electric truck, and traders realize the long-term demand for gasoline is just permanently impaired.
That is a huge factor, yeah. The structural dynamics are shifting, the market is pricing in rapid EV adoption, and also, despite that optimistic 3% U.S. GDP prediction, manufacturing in Europe and Asia is still pretty sluggish.
So energy traders are betting that even with supply disruptions in the Middle East, global demand for oil just isn't strong enough to sustain a price spike.
Exactly. It's a remarkable display of the market pricing out emotion and fear entirely.
So what does this all mean? Let's take a quick look at the daily scoreboard and recap the biggest movers, because honestly, the overarching trends today are almost surreal.
Surreal is a good word for it, yeah.
Looking at the top gainers, we have Micron up 16%, Qualcomm up 15%, and Wendy's up 25%.
Yes, Wendy's.
The fast food chain, famous for square hamburgers. And then on the flip side, top losers are Cerebra's and those other declining chip stocks. And the most active stocks by sheer volume, Micron, Qualcomm, and NVDA.
Quite the lineup.
I just have to pause on this. We have world-changing AI chips reshaping civilization, and right alongside them on the winner's podium today is Wendy's. Surging 25%, please explain to me how a fast food company becomes a top market mover next to semiconductor giants.
It feels like a glitch in the matrix, right? But it's actually the perfect case study for everything we've covered today. Wendy's didn't surge because they invented a better burger.
I would hope not.
Right. They surged because they announced the rollout of dynamic AI pricing and fully automated voice AI drive-thrus across their entire national footprint.
Oh, wow. And what hardware runs those localized AI models at the drive-thru?
The exact edge computing chips from companies like Qualcomm.
It's all connected.
It really is. Wendy's is deploying the infrastructure of the future to eliminate labor costs and optimize pricing in real time. They are a legacy consumer brand transforming into a tech-forward logistics company.
Which entirely validates the thesis that AI is escaping the data center and re-engineering the physical world.
Exactly.
So, to synthesize this massive stack of sources today, what are the core takeaways you think the listener needs to walk away with?
I'd boil today down to 5 key themes. First, we are in a very high-stakes earnings season.
Where execution is rewarded and ambiguity is punished.
Exactly. Look at Micron versus Cerebra's. Second, we have persistent geopolitical tensions acting as a backdrop. But as the oil markets showed us today, their economic impact is being actively recalibrated.
Right, because of that falling long-term energy demand.
Yep. Third, we are experiencing extreme tech sector volatility as capital aggressively rotates to find the true winners of this hardware boom.
Which brings us to the macro side.
Right. Theme 4 is that surprisingly resilient economic outlook. The Federal Reserve's stress test proved our banks can actually fund this massive revolution.
Yeah, that $708 billion buffer is huge.
And finally, fifth, we're seeing rapidly evolving investment trends. When Berkshire Hathaway pivots into AI, treating it like a foundational utility, the paradigm has permanently shifted.
It's the difference between a speculative bubble and laying new economic tracks. When Warren Buffett buys in, the infrastructure phase has officially begun.
It has. And, that infrastructure phase leads me to a final, somewhat provocative thought on where all of this is ultimately heading.
Oh, I like provocative. Lay it on us.
We discussed the NVDA CEO calling out those black market data centers with smuggled parts, right?
Yeah, the ones popping up in unregulated warehouses.
Well, it highlights a really fascinating reality. AI requires infrastructure on a scale humanity has never attempted. And access to that raw compute is quickly becoming the ultimate dividing line between global superpowers.
It's a new arms race.
It is. So I would leave everyone with this to consider. Are we entering an era where computing power becomes the new global contraband?
Oh, wow.
Right? As nations and corporations race for AI supremacy, will these high-end microchips be regulated, hoarded, and smuggled across borders with the exact same intensity as crude oil or weapons?
That is wow.
The data centers of tomorrow might just be the most heavily guarded fortresses on Earth. It's really worth mulling over what that means for the future of global tech dominance.
That is an incredibly heavy but completely necessary thought to end on. Because if the microchip is the new barrel of oil, national security is going to look completely different in just 5 years.
Absolutely.
Well, that's all for today's episode of Tech Money Madness. Don't forget to like, subscribe, and we'll see you tomorrow for more market coverage.